debt ceiling, bank crisis. You might hear about these things and wonder, how can I retire? We talk about the issues and offer up some solutions next on Retiring Today. This is Retiring Today. I'm here with Chawn Honkomp and Loren Merkle. They're both certified financial fiduciaries and certified financial planners, and Chawn is also a CPA. We've seen the headlines recently, the debt ceiling, the bank crisis. Loren, it seems like there's always something that's kind of threatening the economy.
There's always something to talk about that has an impact on pre-retirees and retirees' ambitions to retire successfully. The economy is a part of that. The headlines that we hear about every time we turn on the news or we listen to the radio, that can have an impact on what you are trying to accomplish from an overall retirement planning standpoint. So how do you sort through this mess is really the question that we get from a lot of the families and individuals that we work with. Does this headline really have an impact on me? What kind of impact does it have on me? Is there anything that I can do to insulate myself from all of these terrible things that are happening in the world today? That's part of what we need to discuss. And there are a lot of things that people can do within their overall plan to insulate themselves. And then there's some of this noise that's just noise and we can't control it anyway, so let's focus on the controllables.
Yeah, so we don't want to spend a lot of time talking about the issues as they are, because we know that we're recording this one day and the next day all of this can change. But a basic set on this, the debt ceiling, that Congress has a couple of options in front of them, actually several options in front of them, Chawn. And the reason it can impact retirement is because some of the options that Congress have, they're talking about Medicare and Social Security and cuts to those programs.
It's getting the headlines right now. It's hitting the headlines. They're talking about it, but we've talked about this before. So I know there is uncertainty out there. You're worried about this. You're thinking about this. Like Loren mentioned, how's this going to impact your plan? So we want to be thinking about this, that it's happened before. The government has come up against their debt limit, and then now you see some of the challenges of one stance versus another stance, and are we going to raise it, or are we going to be able to continue to do what we do? But now, as we're thinking about the current time, your concern is, how is it going to impact you with the potential cuts? We see these articles about Social Security having to be lowered, and I know a lot of your plans are based on that Social Security income. That's an important part. So if it was lowered and now maybe we're getting less of a benefit, what does that mean to your plan? So we have to be thinking about this. We don't know ultimately what some of these results are going to do, but as we have this plan, we want to be thinking about it and being prepared for whatever might come our way.
And Loren, I know I've heard you say you don't really think that the U.S. government will default on its loan, but I think that taxes is one way to generate income to kind of work on this debt ceiling, and raising taxes might be one of the solutions.
Raising taxes is probably one of the more probable solutions, especially when we consider the tax rate environment that we're in today. We're at historically low tax rate environment right now. Right now the lowest tax rate we have available to us is 10%. All we have to do is go back to 1980, and our highest tax rate of 37% is replace that with 70%. 1940s, we have to go all the way back before we see another tax rate as low as that 10%. So the taxes, when we pay our taxes at the end of the year, or when we file our taxes in the spring each year, it feels like we pay a lot, and we do, but historically they have been much higher. Raising the tax rates based on where we're at and the historical precedent is one of the more probable action items that Congress can take. The debt limit conversation is one of those conversations that we can have almost every single year. So as you were saying, Chawn, the debt limit conversation is nothing new. In fact, the debt limit was implemented in this country in 1917. And over the next 83 years, there were 90 debt limit increases. So if you look at that frequency, it's even more than once a year. And certainly since the turn of the century, there's been multiple debt limit increases. So this conversation is good to have, and it's good to pay attention to from a planning standpoint and from a pre-retirement and retiree standpoint. What kind of implications does it have? But this is a normal part of Congress conversations, is do we increase the debt limit? How much do we increase the debt limit? And then, of course, we have to pay attention to the political leverage that each side uses to get what it is that they're trying to get. There is no doubt that Social Security and Medicare programs have to be modified. In part of that modification is increasing the tax rates to bring in more revenue, but also on our generation, they can make a ton of changes to those programs to shore it up for the retiree and pre-retiree generation. So this conversation of Social Security is going to go broke, or they're going to decrease your Social Security benefits by 25% if something doesn't happen by the year 2032 or 2033. Yeah, that's a real thing, but there's so many changes that they can make to our generation that we have time to adjust for. Changing it for the baby boomer generation in a meaningful way is probably not at the top of their list.
Let's stay on the history lesson for just a minute, because the banking crisis, we also mentioned that at the top of the show. So a couple of U.S. banks have defaulted recently, the Silicon Valley one being kind of the one that grabbed the headlines, I think even a European bank. But Loren, you did a little digging, and again, history lesson, this isn't all that uncommon.
Yeah, banks feel like a really safe place to keep our money, and they are. When we look at all the different places that we can invest, banks are one of the safer places. But that does not mean that we can't lose money with money at the banks. If we go all the way back to 2001, so it's not that far, 563 bank failures since 2001. That's according to FDIC insurance. So banks failing is almost something that happens every single year. It's just those bank failures don't get the press that the recent bank failures have for a lot of different reasons, but it is a natural part of our society, of our investment chain. Banks come and go, and part of that coming and going is they do fail from time to time.
And whether it's the banking crisis, the debt limit, COVID, interest rates, inflation, the next headline that you see is how will the markets react? You know, I read headlines, markets grapple with banking crisis, markets brace themselves. I mean, the markets almost become a human being. And I think, Chawn, that's when pre-retirees and retirees go, wait, what's going to happen to my money? How will the markets react?
I love your phrase there about markets feeling like a human being, like they can read these reports and react to it. I mean, we know there's always uncertainty when it comes to investing. It's a part of the plan that gets a lot of attention because we can measure returns, we can measure these balances, and that's something you paid attention to your entire life. So we know there's always that uncertainty, and that's really what most of you are looking for. There's all these headlines. There is always this uncertainty, and how is it going to impact your plan? So at all times, as we're helping you build that portfolio and make these investment decisions, we want to make sure you feel confident with whatever we're doing at that time, and knowing that there's always these exterior impacts that are impacting the plan. And we can see positive news and the markets go down. We read negative news and the markets go up. So we never know. We know we can't control the markets. Nobody can guarantee you what direction they're going to go. So it's hard. We don't know. We've got to react, but we want to be positioned such that whatever the markets do, your plan is still going to work, and we're positioning our families to help them make sure they can achieve their retirement goals.
Yeah, if you guys could guarantee which way the markets are going, I don't think we'd be sitting here right now. We'd be on a private island somewhere. But yes, we know that the markets will fluctuate. So you talk about the uncertainty. Well, when you help people build the plans, you kind of plan for this risk. No, you don't know banking crises are coming. You don't know what's happening with inflation. But what we want to get into in the next segment is how do you build a plan with some of these things that can threaten your retirement in mind. So that's what we're going to talk about. But here is one more opportunity for you to talk. It's talk directly to a retirement planner. You can schedule a 15-minute retirement checkup call. You can ask about the debt ceiling limit or the bank crisis or whatever is on your mind when it comes to retirement. Check out the website that's on your screen right now and schedule your 15-minute retirement checkup call today.
Retirement is all about staying active and spending time with loved ones. But you may still wonder if you can have the retirement you've dreamed of. Download our complimentary Retire Your Way toolkit to receive a copy of Loren Merkle's new book, Retire Your Way, and 5 guides that'll help you turn your retirement worries into confidence. Go to retireyourwaytoolkit.com. Don't just dream about retirement. Take action and retire your way.
This is Retiring Today. I'm here with Chawn, Honkomp, and Loren Merkle. Guys, first segment, a little bit of doom and gloom. We had to talk about some of those things that threaten the economy, can threaten the market, COVID, inflation, debt ceiling. But we're offering some optimism here in this segment. And I like that because sometimes as you get close to retirement, you feel like, things are out of control. But there are things you can control.
It's very deflating to just think about all the negative stuff that we hear on the news every single day. But the optimism is there's so many things that we can control, and we don't have to let all of those uncontrollables really deflate your overall investment experience, because your investment experience to a large degree is something that you do have a lot of control over. So that's what we want to focus on as it relates to the investment performance of your overall retirement plan. How do you create that recession-resistant portfolio so your portfolio doesn't blow up when the markets blow up?
And I like to think of what we're about to do is kind of peel back the layers. It's good, you make these investment decisions, maybe in a 401k, you set them up, but you don't necessarily know what's underneath, the curtain. I'm thinking the Wizard of Oz scenario here. So Loren is going to peel back the curtain and show us.
Yeah, because a lot of people on the couch might be thinking, what do you mean? I have control over my investment performance? I just put my money in the 401k plan, I invest in one of these default target date funds, and it just does what it does. What kind of control do I really have? That's what we want to talk about, is what can you do from a target date fund standpoint underneath your 401k plan? Why do you feel like you may not have as much control as you have? Because you're investing in most 401k plans, the target date funds are the default investment option, and your employer probably really encourages you to use these. There's a lot of benefits to them. One of the disadvantages is you may not be as diversified as what you really think. So let's look at how this target date fund really works. This is a real fund. We just stripped away the company's name because the company's name is not important. There's a lot of companies that build these, and they all work relatively in a very similar fashion. But you're invested in this target date fund. It's going to automatically get more conservative as we approach the year 2030. Inherently, that is a very good thing. But what are you really invested in? Peel back the first layer. Underneath that target date 2030 wrapper is 4 different mutual funds with this particular fund. Some target date funds will have 20, maybe 25 different funds. This one has 4. So you're actually not invested in one fund, you're invested in 4 different mutual funds. International bond, domestic bond, we got domestic stock, and international stock funds. So you're feeling even better because it's not one fund, it's 4 funds. And then you keep peeling the layers, and you find out you're actually invested in 9 different sectors. So 9 different sectors, you're feeling really good now, except for we go through a year like 2022, where the NASDAQ was down 34%, the S&P 500 is down 20%, and 8 of the 9 sectors lost money. And you're looking at your 401k plan, the balance of your 401k plan also went down. And this goes back to what we were talking about is, do you feel like you have control over your investment experience? Because there's not much that you could do about that. And that's where the diversification really comes into play, which we don't have as much diversification exposure to the 401k plan as what we do with some other investment options.
I think I know where we're going with this, because you are going to come in and peel back the layers even more and show people an option, something you can do at 59.5 that gives you even more control.
Yeah, we know most people save most of their retirement money into these 401k plans. There's a lot of good components to these 401k plans, but what you want to be aware of is at what stage of life do you potentially have more control or more access to these retirement balances? What's most common is age 59.5. That's the point in time where with most 401k plans, you have an opportunity to get control of that balance and take it out to an IRA. Some other plans may be 60, 62, 65, or anywhere in there with a separation of service.
Yeah, through the in-service rollover.
Yeah, you have an opportunity to be able to make that decision. And what that provides to us, what that provides to you is control. We know we still want to go out there and achieve the same goals of diversification as we invest and design your overall portfolio. We still want to have allocations across the different sectors and asset classes. But that opportunity now with more control, taking your retirement balances out to an IRA, now there's more things you can do. You have this entire world of investments to select from. So we're going to look at some of these. We're seeing some commodities up here. We're seeing some alternatives. Those are 2 of the asset classes that we may want to have part of your portfolio in. And this is showing 2022 performance for a handful of commodities and alternative investments. You can see that various commodities had a really strong year, like lithium. In a down market, which was 2022, lithium performed very well. There's a handful of other commodities that also had positive years. Now, don't get me wrong, there's also a handful of commodities that did perform negatively, just like the overall markets. Same thing can be said for alternatives. You see a couple of real estate farmland that had positive returns, and then an option like private equity, a very negative return, which reflected more of the overall markets. But as you go out to this IRA, you can be more custom. You can identify the specific investment options that you want to pick from that fit your overall plan, that align with your risk appetite, where you're at in life, and fit, again, that customized retirement plan that you have. We still strive to have that diversification. You think about the 401k that Loren talked about. If we look at this pie graph, the 401k would be all in this blue color, which is those traditional sectors. You pick that single investment option like the 2030 target date fund. You think you have that diversification, which maybe you do, but is it the right fit for you? Somebody's managing that 2030 target date fund for the masses, the several million or even billions of dollars in that fund. They're not looking at your custom plan. So now you can achieve this diversification that best fits you. We still want to use some of these traditional sectors, but now we want to identify where is it the best fit to fit in some alternatives within your overall portfolio? Where does it make sense, and what are the right types of commodities to fit into your overall portfolio? It's about control, it's about customization. Let's be positioned to be in the best spot to achieve all of your retirement goals and not let your retirement plan blow up when the markets do whatever they're going to do.
Yeah, everybody knows that you can't have all of your eggs in one basket, and that just means you need to be diversified. But there's so many different ways that one can diversify today than what we've ever been able to before. Before, you used to have to be a hedge fund manager, participate in a hedge fund, or some of these types of investment options that the retail, just the average investor, didn't have access to. But now, with technology and the way that this investment world has really evolved over the last couple decades, just about anybody has access to those types of alternatives and commodities, just extra ways to insulate themselves from the downward movement of the traditional sectors that involve bonds and stocks. So it's just, the IRA offers a lot more benefits from a diversifying standpoint than what the traditional 401k offers.
And go ahead,
Well, I
Chawn.
was going to say, it's common that we'll talk with these families and we'll say, well, if you don't invest in mutual funds, then what do you invest in?
Right.
And that's where, again, it's looking at this entire market, this world. And I think you mentioned too a little bit, it's nice when we can get more diversification, we have more control, more options. And then when we do have a certain sector that maybe performs poorly, that diversification can help offset some of that. You know, we're trying to make decisions for the overall portfolio to make sure that we don't have too much exposure on the downside.
I was thinking about something I heard you say about risk. I think you said you kind of really dove into one of these 2030 or 2025 target date funds, and the couple or the individual you were talking to was taking way more risk than they realized. They assumed that as you got a little closer to your target date, the risk was off the table, but it was kind of surprising when you looked into it.
We look at a 2025 or 2030 or 2035 target date fund, and for just one person, for yourself, you're thinking, okay, that's only 2 or 7 or 12 years away. So yes, they must be taking the right amount of risk for you, right, for your plan. That isn't the case. In just last year alone, 2022, a lot of these 2030 target date funds went down anywhere from 10 to 15% or maybe even more. So is that the right risk? And that's where, again, that opportunity to have more control of your plan, that can be really meaningful and powerful for your plan.
Yeah, and I think it's important. We don't want to be misunderstood. There's a lot of benefits to the 401k plan. We all use 401k plans for our retirement savings. We just advocate to use these vehicles for what they're designed for. The 401k plan is designed for new contributions. You can contribute way more money to a 401k plan than you can an IRA. You can get an employer match if you're lucky enough to be a part of an employer who does contribute on your behalf to the 401k plan. That's free money. We love free money. So there's a lot of benefits to the 401k plan. It's just use the vehicles for what they're designed for. IRAs, in our opinion, in most cases are best to house the vast majority of your retirement money. 401k plans are best used for your new contributions if you have a plan that has some of those attributes, like free money from the employer as well as the higher contributory limits.
Loren and Chawn have both said a plan several times. So what is a retirement plan? You might be wondering, what does it look like? Here's a great opportunity to see exactly what a customized retirement plan looks like. It's our online Journey to Retirement workshop. You're going to see a couple. You're going to see the decisions they make. You're going to see how they put together a retirement plan. Chawn, Loren, and Anne-Marie are going to take you on a journey to retirement. There's a website on your screen. You can sign up by going to retirewithmerkle.com. But we're not done talking about some of these things that are happening in the economy and how you can take control in retirement. Next.
Retirement is all about staying active and spending time with loved ones. But you may still wonder if you can have the retirement you've dreamed of. Download our complimentary Retire Your Way toolkit to receive a copy of Loren Merkle's new book, Retire Your Way, and 5 guides that'll help you turn your retirement worries into confidence. Go to retireyourwaytoolkit.com. Don't just dream about retirement. Take action and retire your way.
This is Retiring Today. I'm here with Chawn, Honkomp, and Loren Merkle. So you outlined what it could look like to do some portfolio diversification inside an IRA, but next we want to talk about another way to control what happens around you, and it's tax diversification.
Tax diversification is another really strong way to control your overall plan. We want to get these different tax buckets filled up. Pre-tax, everybody's familiar with pre-tax. That's the most common form of tax savings. A majority of the pre-retirement savings that's out there is in pre-tax. And we want to start having this plan so that we can get more into the Roth bucket. We can start filling up a non-qualified bucket. These buckets, once we have them filled, we have more buckets, we have more options. As you go through your retirement journey and you strive to have a certain amount of income, if you have different buckets to pick from, well, now you have more control on how much taxable income we show. So as these tax rates potentially rise up, we never know for sure. We don't have much control. The government's never called me to ask what they think tax rates should do. But you have more control.
Only if they would.
Yeah, only if they would. They should call our firm. But now you have more control to control how much taxable you can fill in with some Roth or some non-qualified to be as efficient as possible with the total tax bill.
Yeah, it's taking control over the things you can control. We can't control Congress and what they do with rates, but if rates do go up, and you have taken control over your tax diversification and you have an element of your portfolio that's going to deliver income, is going to deliver income to you tax-free, tax rates go up, it's not going to influence this piece of your overall portfolio, and that's one really effective way that you can increase your spendable income, decrease your overall retirement tax bill, and you can have a lot of control over that part of your plan.
And of course, we're talking about tax rates because that's one of the things that Congress may do to shore up this debt ceiling problem, or at least alleviate it a little bit. So a lot of talk of taxes being raised.
A lot of people feel that they have a tax plan if they have a CPA and it's a tax preparer. Tax preparation is much different than tax planning. That's our role as retirement planners. It's about that tax planning. And the goal is to have that long-term tax plan. We all aspire to have a 20, 30, maybe 40-year retirement journey. And we want to have that long-term tax plan. What decisions can we make today? And then in the next few years, that over your entire journey, what saves you the most in taxes and puts the most amount of money in your pocket to spend?
I'm sure that people watching are like, I like the idea of tax buckets. I like the idea of tax diversification, but how to get there probably still is a mystery. You do this for a couple in the online Journey to Retirement workshop.
Yeah, this is a hypothetical couple. We call them John and Sue, and they're just a couple short years out from retiring, and they are like a lot of pre-retirees where they don't have tax diversification. They feel like they're diversified from an asset class and investment standpoint, but they have all of their retirement savings in pre-tax accounts they've never paid taxes on before. So they are not insulated in future tax rate hikes, because when rates go up, and they take money out of that 401k plan, they're going to be assessed at ordinary income, whatever that rate is for them. So in this online Journey to Retirement workshop, we show you how John and Sue implement tax diversification strategies, not only how they do it, but specifically what strategies they implement, and then also the impact that it has on their retirement income, regardless of what happens with tax rate hikes.
Yeah, and I don't want to sound dramatic here, but I think that at least makes you think now is the time, at least if you're getting close to retirement, because if tax rates go up, it could be too late to do something. I mean, right? Don't wait much longer if you're out there and thinking about retiring.
Every December 31st, and you do not have a cohesive tax plan put into place, that could be a wasted opportunity for you, because the most effective tax planning strategies you cannot do in the spring of the following year. You have to do by end of year. So every December that goes by and you don't have a tax plan that's intentional to you and your overall retirement goals and ambitions, that could be a wasted opportunity. We have to start now.
Okay, so don't waste this opportunity. It's an online journey to retirement workshop. You can see the tax plan that Loren was talking about, but you can see a lot more, because here's what you're going to do. You're going to go to the website on your screen. At least here's what I think you should do. I think you'll be glad you did it. If you go to the website on your screen, I'm not trying to be bossy here. I'm trying to help. Hey, I'm trying to help the people out here. So there's a website. It's on your screen. There's also a QR code. Once you get there, you can choose a time and a date that works for you. See how nice that is? And then you can watch our online journey to retirement workshop. You'll also get a kit in the mail too. This is pretty neat. There's going to be a workbook in there. There's also going to be some fun travel type things that'll get you excited about your journey to retirement. And Chawn, spending this time on this online journey to retirement workshop, I get excited about it, and I got to get a little bossy because I really think it's the kind of thing that people are going to be glad that they spent their time doing.
We know the reality is people do need help making decisions, and we don't know what this your retirement journey is going to look like, and all these uncertainties, and if more banks are going to fail, and if interest rates are going to keep going on. So this is a great way to get started. It's right about 2 hours. We plan for 2 hours, a little bit shy of. This is something that you can commit to your retirement journey in the next stage of life. We know a lot of you plan for your vacations several weeks in advance and spend a lot of hours. So take some time, plan for your final stage of life, that retirement journey, and be in the best position possible to achieve all your dreams.
And it'll be fun too, right?
It's going to be a lot of fun. There's three of us, Chawn, myself, and Anna Marie. We have a lot of fun, and participants enjoy it as well.
And you can tell we also have some fun on this show, but we also want you to learn a lot. This is Retiring Today, and we thank you for watching.
Do I have enough saved for retirement? When should I take Social Security? Which Medicare option is best? How do I plan for inflation? Sometimes the road to retirement starts with more questions than answers. We're here to help. Join us for our upcoming Journey to Retirement workshop. Get answers and start your retirement journey with confidence. Our online workshop includes information on Secure Act 2.0 and changing retirement rules. Visit retirewithmerkle.com to register for an upcoming workshop. Your retirement journey starts now.